Thank you for joining another episode of RM Smart Investing. I hope everyone has had a great week so far, and welcome. It's almost end of the week. It's spring, April, so it's glad to have you. So today, what we're going to talk about is how do we analyze these Wall Street analysts and how we can put value on their recommendations that they come out, they get paid big money, and how do again we evaluate their performances. So with that in mind, let me start with this. The cartoon. Okay, so they rate the stock as strong buy, while we rate it as strong sell. At least we both feel strongly about it. And that's the interesting things about the analysts, the markets, the pundits. How do we know if there is analyst who has supposed to have a lot of experience and supposed to be independent, how we value their recommendations? So with that in mind, today what we're going to look at is, first of all, what does an analyst do? What is their job? How do we define that? And then how do we factor the factors that we use to consider in analyzing the analysts? What qualities should they have? And what type of, when we talk about analysts, they're not all the same. What types of analysts are there? And how does these that analyst stock ratings work when we say, well, uh, do they have this uniformal rating system or they're different? But I also want to introduce some terminology so you can hopefully add it to your itinerary and to understand what these analysts have to pay attention to. And how about rating the analyst? Is there any independent agencies or some a third party which analyzes these analysts so it gives us a better understanding of which ones we have to pay attention to and which ones we shouldn't? And then how about top analysts who performed well? And then we look at some examples, how we look at the stock ratings. We will talk about like the buy and sell. How do we find them? And at the end, what I'd like to finish our session would be just use an example that we've looked at as a stock, how we can take advantage of these analyst ratings. With that in mind, let us start with what does an analyst do? So basically, financial analysts, which I used to do, and I know some of our members here, they are financial and stock analysts. What they do, they collect the information and the data, they organize all that, and they put it in structure, and then they make projections and forecasts. And then they have building the financial models and they analyze the financial results. And then they come up with providing the recommendations. So and then, of course, they create charts and graphs. So, as an analyst, for instance, what I do, we will meet with the management, for instance. Now, generally, the managements, they would not give you a lot of data. I mean, we will hear the earning calls, the conference calls. So it was more of, for me, was, and a lot of, again, analysts, we want to go outside. We would talk not only to the management, we want to talk to the suppliers. I want to know the customers. How did the customers feel about, and did they balance? Did they really what the management was saying was in line what the customers are doing? So these are the things that it's important for an analyst to do. So it's not just about analyzing the data, but also we call it the qualitative side of things. So some of the career side is basically, the background would be they will have MBA. A lot of universities, they have a lot of actually brokerage firms, institutional firms, investment bankers. They actually have their own little niche. They have their own little universities that they go to recruit the analysts and investment bankers, for instance. Fidelity is big in Boston, for instance, like Boston University, NYU, for instance, University of Chicago. of course, Stanford, USC. These are some of the universities that a lot of brokerage firms, Goldman Sachs of the world, they like to go and recruit. They could be CPAs. They want the qualification will be certified public accountants. Of course, nowadays, chartered financial analyst is very much valued. A lot of firms, they encourage anyone who's applying to them at least sit for level one, and then even some certified financial planners. So basically, they should have that background, that analytical background to collect the data and try to be independent. So, as an if I am analyzing an analyst, what factors that I look into, and these are again based on my own experiences, I want to know how long they have been in business. Now, for instance, they could be very smart. They just came out of school. The markets are doing good and they make really good calls. For me, that's not enough. I want to have an analyst who's gone to different cycles of economy. When things are good, when we are in an uptrend, well, everything looks good. So it doesn't take a lot of, again, a lot of expertise. So they can be, a lot of actually analysts become momentum players. Basically, they look at the hot story of the day and they coattail that. So for me, experience is important. It's not the only thing. That doesn't mean that they are successful, but at least tells me they have tasted different cycles. Also, the qualifications. So we just talked about a few of them, whether they are they have MBA or they were finance majors, they're CFA or CPA. So that gives me the dedication and understanding of the markets. But more importantly, believe it or not, that the most important things I look at it is how do they get compensated? And we will talk about different types of analysts. Is there's a relationship, maybe the firm that they are working with, do they have relationship maybe from the investment banking side, maybe 401k working side? They have retirement plans for that. So they know if they're getting compensated, if they go against the company that they're covering, for instance, would they get fired and they will lose. So there is this independent uh, judgment should be in there so that unfortunately it's not 100% there. And that brings me to this. So it says, do it over. You spelled by wrong. So basically, what that tells us, sometimes the management, based on their own internal interest, they kind of dictate to the analysts to make a different decision than they were supposed to. So, types of analysts. When we talk about analysts, they are not all the same. We have a sell side analyst, we have a buy side analyst, and then we have independent analysts. And these independent ones are the companies that they're not they doing their own research and they sell it to anyone who's willing to buy on a monthly basis, on an annual basis, or just per report. They will sell that. One of the most famous ones, if you know, it's been many, many years, is like a value line, for instance. And then we will look at some other ones that I will use that as an example, like the street.com or used to have Ford, for instance, and even Charles Schwab has it. So basically, we'll talk about that. So the big ones are the buy side and sell side. So the main difference between the buy side and sell side analysts are the firms that they are employed at. So for instance, investment bankers, market makers, broker dealers, they're on the sell side. They are they have a really deep pocket and they provide investment service to the rest of the market. So that's the sell side. Now, the buy side, when you think about it, is think about mutual funds, think about asset managers, hedge funds, that they buy or sell securities on behalf of their clients. They're the ones who get these research. Now, the buy side analysts will determine how promising an investment seems and how it will goes with their own strategy. Sell side comes with the issues that you hear about, oh, this is a buy, this is a sell, and that's what you want to pay attention. So basically, that's the objectives are different. As I mentioned, the sell side, for instance, they have relationship with the companies that they're covering, and that's why I want to be paying attention how the compensation works. So again, this is another slide just comparing the pros and cons of the buy side versus the sell side. Now, in the when we think about the pros of the buy side, for instance, they have close relationship with their clients, focus on the long-term strategies, they look at the broad market. On the other hand, on the sell side, they have direct access to clients, as we mentioned, they in depth inside of the management, and it goes back again to that compensation, right? They have more career advancements opportunities for people who want to become analysts. The cons are, when we think about, again, buy side, obviously they have limited access to the management teams because the sell side is the one who does that. And they have less exposure to the market, limited career advancements compared to the sell side. So, but as I mentioned, I want to look at this. There's a subject to conflict of interest. And as we discussed our terminology, I will uh, hopefully we become even more familiar what I mean by that. So when we think about this analyst stocks rating, what do we mean by that? So each one has its own terminology, but the major ones that you hear, they come on TV. They have become actually celebrities, these analysts, and they take pride on what they do. And sometimes it almost becomes an entertainment rather than really education. But anyway, so when the markets are the analysts are very bearish, they come up with either sell or strong sell. When they're still bearish, but they're not as bearish, and it's like they feel it's going to underperform the markets, they call it moderate sell, weak hold, underweight, reduce, underperform. And then when they're neutral, they could be a holder of it, or they can be in either way neutral. They might not have it, but they would say, well, hold on. They call it hold or neutral. When they are slightly positive, they call it outperform, moderate buy, accumulate, overweight, add. And then when they're really bullish, they call it buy or strong buy. So this is the terminology. Again, each firm has its own, but this is the gist of it. They're a little more, like for instance, when it comes to independent ones, they use star system or like 5 star or 1 star. And I want to use an example. I want to go back. Actually, this is Alcoa from March of 24. So ignore this 4-1 was in the, but this was March of 24 of 2021. So we're going back 3 years, and you can see, well, there was a drop, and it's almost like a morning star. So I want to pay attention to what's going on with the analysts. So it kind of interested me. Alcoa shares are trading higher after Morgan Stanley upgraded the stock from equal weight to overweight and then announced at $43. Remember that the price of the stock is at $30.13. So they came up with $43. That's like $13 more. And that's about over 40 to 3%. And look where the market was. I mean, it was at in October, it was at like a $10. So we're going from 10 to 43. And you can hear those. And then we have another analyst from Deutsche Bank. They also upgraded Alcoa to buy from hold to adjusted price of. Now they adjusted the target from $36 and it used to be $22. So that's not a lot. I mean, if it goes from 31 to 36. So the reason I want to share this with you is, well, they're these analysts now, they are harmonious. They are mentioning this. This is again, recall when this is. This is 2021. They see something. They see something about inflation, the supply side. So paying attention to analysts is not a bad thing. As I mentioned, they become more of a celebrities, entertainers, but sometimes if there are good ones, you want to make sure they follow the industry because we have analysts who follow individual companies, but a lot of them are sector analysts. They're in individual analysts that stocks, individual stocks or stocks, industries or sectors. So you want to see, well, again, the experience comes into picture. So it is good to know. Some of them, again, they get compensated. So they just, I mentioned to you, it's like more of a momentum analyst. So they just go with the hot stock and then just follow the market or the crowd. So in this situation, what I want to look at generally when these ratings happen, usually it's for 12 months. So for 12 months, what I did, I said, all right, this is March, end of March of 2021. Let's take a look at if he would have bought here, and that was the date with the Morning Star, what would have happened a year later? So the analysts, they were pretty correct. Although, again, we can see there has been topsy-turvy, but if you would have listened to that, and of course, the markets, again, remember, it's 2021, they did very well. But remember, 2022 was a down year, and then the Alcoa went to $100, of course, with the fear of inflation, the supply. So that worked out very well. So something like that, remember, we were at $10 and we have gone to 100. So that's one example. The other example I want to use is the GameStop. And with the GameStop, as you know, this is going back again to March 24th, 2021. If you recall, these are the times of these Reddit and the Robinhood crowd, the Wall Street crowd. I mean, the youth, again, it was like a Reddit crew that they were following this. So all of a sudden now we have analyst action. Jeffries, they come up with and they put the price target to 175 from $15, and they maintain hold rating. Now, I want to also mention that, as you see that $483, after that, remember, we had, just recall, we had a 441 stock split. So, 483 should be really 120, 121. So if you look at the 142, you have to divide it by 4 at that time. So anyway, so they really pushed it. On the other hand, we see, wait a minute, Wedbush actually downgrades and puts, remember, the price is at 142. They put a price of $29. So who do we trust? And Wedbush has been a long time follower. And so basically, what happened is um, we go to the following year. And this is where we would have bought. So again, this was adjusted so we can see that the target hit, it wasn't 175, but it did go up and then it came down. As a matter of fact, believe it or not, if you look at GameStop right now, there are a lot of analysts that they put a $5 um, as far as a price target on it. So that's what you have to be really on your own analyst. This would be my recommendation, but you just want to follow the good analysts. One of the things we will talk about is before I go to the rating these analysts, I want you to pay attention to some terminology. It's important. That's why it goes back to the um, as far as looking at where the analysts coming from, how they get compensated. There is something called Chinese wall, and the reason that is, it's actually a virtual barrier which is within the intra-department in the companies. Each one has its own purpose, and each one will evaluate things on what their goals are, but they're supposed to be protected from each other. That means they cannot share information. Before I go to the next slide, I'll just give you one example. And let's say I'm an attorney for the company, and I know we are being sued, or I know a company is being sued. And so, but I'm the attorney. From legal point of view, I cannot share that, for instance, with an analyst. So these are the things that you want to take into consideration. And other big ones are, and you can see, we have the private side, like investment banking. So let's say they're working on Apple. I just use that as an example, or Nvidia, and they know they are working on, coming out with issuing more shares or whatever. There's some government actions, big things are coming. Well, they cannot share this with the sales and trading, with the research team, with the pension funds, insurance companies, asset managers, and that is supposed to be a private. So that's why there's this Chinese wall. Now, one of the things, if some of you are familiar with like developing countries in emerging markets, I remember when I started in the 80s, and at that time, even 90s, I'll give you one example of what I used to, it was not illegal. So it was very legal to be able to share all these. So if you knew the right person, let's say the attorney, investment banker, boy, you could use that, and that was not insider information. You could take advantage of that. Or one of the tricks, or what it was, I just shared this with you from that point of view, in the 80s and early 90s, there was in Switzerland, for instance, there was this famous restaurant. And what would happen, a lot of corporate managers and CEOs, they will have their meetings in this famous restaurants. So the waiters and waitresses, they had access to all kinds of information. So as an analyst, you don't go talk to the CEOs, CFOs, and basically all these companies. What you would do is basically talk to the waiters and waitresses. So these are the things, but the things have really gotten a lot more regulated now, but I want to understand what does Chinese wall mean. Also, there's a mosaic theory based on, we close to that Chinese wall, we talk about insider information. So there are public information and there's a private information. When there's a public information, there are some called material. And what that means, when we talk about material, that means if I had that information available to me, it will make the price move. So these, when it's public, everybody knows that. So basically, for instance, quarterly reports, the dividend yields, the management changes, this is all public. So the non-material is if somebody is, again, in social media, or some of the people make their, they're not happy with something. That doesn't really, it's a personal thing, opinion, so that does not affect the price. So the difference is, in mosaic theory, you have public, you have private. The public could be material or non-material. Private could be material and non-material. But this is the difference. Insider information is using that private information when it's material. That means the knowledge of that. If I see, for instance, talk to that waiter or waitresses, or an employee or the CEO, which the public does not know, and I know, let's say they're doing a merger, for instance, then that becomes immaterial, and that's illegal. Now, in the past, it wasn't, as I mentioned, in emerging markets, especially, it was not. So basically, again, there could be rumors. You hear a lot about these, the private conversations, coffee conversations. So mosaic theory, as an analyst, what we try to do, we want to put all these three together. Now, one of the things we used to do, let's say I'm in an elevator and I see the two CEOs together. No conversation, no nothing. If I see that, for instance, two companies, there's no relationship in a sense, but I've been doing a lot of my own research, then I can take that and say, I become curious, and then I do my own investigation. So they never indulge any information. Maybe there's nothing, it was coincident. But that's really, it was not something that it was, anything was said. It's just, it's based on my own hunch, my own investigation. So mosaic theory is very important as an analyst. So the third thing is, if were around in late 1990s, if you recall Enron story, if you recall Tyco, the WorldComs of the world, these analysts love them, majority of them. They will all have these buy um, ratings. They couldn't do anything wrong. So in 2002, Sarbanes-Oxley Act was passed, and it passed to protect the investors from these corporate accounting frauds, basically, that even, again, it goes back to the way analysts are compensated. So in order to avoid that, they put this act so they become more independent and they won't fall to these numbers. All right. So how about rating the analysts themselves? What happens is, as far as how do we analyze these analysts? There are a few organizations. I just share some with you. There's Tip Ranks, there's StarMine, even Morningstar. So you can go to them if you want to, if you're really serious. I also look at like institutional investor. I've been since 1980s. They honor like the best of the best. They even have the Hall of Fame. Is really interesting. So the all kinds of different analysts in different industries, they honor them. So just using tip ranks, how that like tip ranks analyzes these uh, analysts. It has a three tier. They put a lot of emphasis on the success rate. They look at, how they have performed, obviously, and the average returns. And as far as statistical significance, it's important because the higher amount of recommendations ensures the analyst consistency. So if I come up with 3 recommendations and 2 of them are good, well, that's 66%. If I come up with 50 and 30 is good, that's a lot more important than 3. So basically, that's how the rating works. So some of the top ones, I'll show you from tip ranks. This was done a year ago, so just want to share that with you. The top 10 ranked that at that time, it was market process. He was his average return has been 28.2% for the past decade, and success rate is 73%. So they do this. I just want to show you the source. If you'd like to follow it, you can always do that. So believe it or not, Mark actually moved after this was issued, he moved to Evercore. So just a food for thought. And you can also see some of their, his recommendations. He has like 68% buy and 31.6% hold. And this is as of January 24th. And you can see some of his recommendations. So you have access to that if you like. A lot of, on the other hand, a lot of them you have to pay some kind of a fee. But some of these are public, and I will share with you some of the, how the upgrade downgrades work. Another one is another, it's probably from CNBC or Wall Street. I think CNBC, not Wall Street Journal. They looked at, the top analysts recently. As you can see, this is as of April 16th, for instance, from Baird Company. And basically the average returns, how success rate is, and their rating. So basically, oh, this is actually April 17th. So another, again, a tool that you could have. So how about stock ratings? So for instance, you every day you see these upgrades and downgrades. How can you find them? There's many, of course, there's Market Watch, Bloomberg, Yahoo Finance. If you have, now it's a Schwab account, if you have Thinkorswim um, uh, platform, for instance, just the easy ones you can do, you just go to the codes, and then under codes, there's this drop down, and you see it says lovers and uh, losers. So basically, you can just click on, okay, today, what did we have? We have the analyst downgrades. It's right here. So you see all these companies, and that's at the end of the day, it shows you, well, when it was downgraded, you see the power of the analyst, at least in the same day. So you gotta really put with a grain of salt, you gotta do your own independence. But generally, the first thing is it is a negative, but then after a few days, things can get back to normal. So depending on who the analyst is. So we have these, and then you see that for the upgrade, analyst upgrade, you see these come, this is as of today, close of today, you see Johnson and Johnson. A lot of these come, Zscaler, for instance, they come after the earnings. So they get some more news. A lot of these private companies had their earnings, and you see how they behaved end of the day and what was the volume. And basically, just if you have, I think, so, but other services also allow that. So I just want to share with like some of the strongest buys right now, the companies that just shared the five, there are 50 of them. Yeah, strong buy. Now, strong buy, that's a good thing, but also it could be negative. So this is from my perspective. It's good to know that there are five analysts, they agree that Sprout Social is a strong buy. Zscaler, I look at the 25 and they are strong buy. So basically, there's two ways. Number one, that shows there's a harmony. And also, you have to remember a lot of analysts, especially in New York, in Wall Street, they go to the same bars, they go to the same restaurants. And for that reason, a lot of times you see a lot of as far as the same opinions. They talk to each other and they share things. And very rarely you hear the sell sign, I mean, the sell rating. Imagine 2007, 2008, 2009, even, as the market's going down, there's still not many had admitted they were putting the buy on the markets. 2000, let me think about internet time, the bubble. So there's a couple of things. I mentioned about compensation. They don't want to ruffle the company, their relationships. They are told, I shared that cartoon with you. The other thing is they don't want to be the black sheep. If they're 25 are putting strong buy, well, if they come up with a strong sell, my God, they're going to be the oddball. So they rather be part of the crowd. So if everyone is wrong, hey, nobody will notice that person. But that's the courage you got to have. So basically, the other thing that I have to recommend also, when you have a lot of strong buys, that's really good. But are we too late to the party? If everyone, remember, the institutions already know this. So if the buyers already know about this and they already have gone and piled up on the stock, who do we have left to sell to? So food for thought. That's why sometimes it's interesting to go look into strong sells for a candidate. Just a food for thought, being a contrarian. Another one is, again, this is as of April 15th. I found out some of the major S&P 500 that are all strong buys, for instance. And again, just ideas for you. And sometimes the topping happens when there's just so much, again, one-sided, one side. I mentioned about independent analysts. So basically, like for instance, they sell themselves. They're not belonging to any institution. They are independent. They have their own group. Like Argus is one of them. This is just the latest, as you can see, like April 16th, 15th. These are some of their ratings. And I really like the ratings when they move. Sometimes they skip a couple of ratings. So let's say I love to watch sell to move, let's say, to buy, or sell to moderate buy. So those are important because what happens, a lot of institutions which follow these, let's say, these analysts or that recommendations, now they get the confidence to buy. So basically, that means there's still momentum there's still more move coming up. And generally, especially after the earnings, if that momentum has changed, it continues. So if the earnings was especially beloved surprises to the upside, the markets love that. So it's one of the interesting, our good old friend McCormick and Company has gone from hold to buy. We've talked about McCormick, and that was after the earnings. So basically, it's in, we have Micron here, and then like Schwab, for instance. Schwab is a platform, right? But they also have their own equity ratings, and you can see how they use letters. I mentioned about stars. They use letters. These are more on the individual side. So you can see we have Morningstar Equity Research, we have Cifra. So these are some of these to have Ford, Street.com. So basically, there's some independence. If you use Finviz, this is another way you can look at when you look at analyst recommendations. One is the best. So it goes from 1 to 5. 5 is a strong sell, 1 is strong buy. So let's say you have nothing to do this weekend. You sit down and say, well, let me look at S&P 500 and see what are the strongest recommendations. And oh, 1. So you come up with these names. So I just went to the performance. So you can see I ranked them by recommendation. This is a real estate company. Well, they haven't done very well. Of course, interest rates play a role. So I was just looking at the performances, what has happened. So we can go and use a strong sell as candidates. So just a food for thought. All right. So hopefully so far it has been helpful. I just want to finish our presentation with an example. Since we've been using Siri, and if you recall, we've been talking about be careful, did not get the buy signal, and this is we so last night, I believe we finished at yesterday at $3.10. So I wanted to take a look at this. It goes all the way back to October 28th. I like to see who's following, and I like to see if they have changed. So for instance, I see on April 2nd, there was this upgrade from Deutsche Bank, went from sell to hold. That gives me a little comfort. And they've gone from, oh, I'm sorry, this is April of 23rd. My apologies. They've gone, so that gives me a little confidence. So, and this is April of, you can see right here, April of 23rd, and oh, not a bad call. So, but then we don't see anything. So Wells Fargo downgraded. They still have a price of $4.50, and Guggenheim initiated. What does initiated means? That means that this analyst from Guggenheim, they have never made any recommendations in the past. The company could have, but the analyst has never. So it's important. I'm always interested to see. They usually do their homework the first time. They want to be the right ones. So we look at the initiation. Again, using my own experience that I share with you, you go to these conferences, a lot of times the small companies, they bring their own analyst. So they beat the drum, and then you find out there was this investment banking relationship. So be aware of that. I don't like when the uh, companies have only 2 or 3 analysts following them. It's good and bad. One, the good thing is that public doesn't know, so you could be your own analyst and do your own investigation, especially generally there are smaller companies. The bad thing is generally there is a compensation and share arrangement with these analysts. So I'm pretty careful. And that's why I watch the insiders, for instance, their activities. Are they buying what they're telling us? And basically, I always read the fine line. Everything is about the fine line, the fine print, I mean, the fine print. What does it say about relationship between those analysts? I'd like to have 5 or 6, and because of the diversity and back in what they are saying. So anyway, so this is for Siri, but also, you can see as far as the recommendations, uh, the history of it, the strong buy, where we stand right now, some of the latest ones as far as the holdings. This comes to from Chart Mill. Chart Mill, yeah, again, is free. So I try to use resources that they are free to you. So you can go and analyze series holding. Also, you can see, oh, we just talked about Wells Fargo. As far as basically some other recommendations. They've been 15 in January 11th. We look at the direction of the analyst recommendation. Now, in April, all of a sudden, we're at 18. There are four strong buys, four buys, eight holds, and a sell. So basically, also, we want to see what happened with the earnings. And again, April 30th, be aware of that. What is the average analyst price target, which is $4.56, the high and low. Another thing I like to look at is I don't want to have a huge range between, now this is like 125%. I mean, that's a huge wide array. I like to have closeness, it's like 20%, 30%. So this is huge. So when you average it out, yeah, it looks good, 456 going from 310, but there's some extremes. So again, be your own analyst. So here is again from Thinkorswim. You see, as of yesterday, it was like $3.10. And again, we talked about these independent analysts that they looked at Siri. They have a 2-star. Morningstar has a void, for instance, or I mean, Market Edge. We have Argus. We talked about and Morningstar has a 2-star. On the other hand, Schwab actually has a buy rating on this. So again, you can see such a big variety of recommendations here. And also when you go to like Schwab, as far as their website, uh, you can see that all the ratings are here. You can follow what the Morningstar is thinking about this, what Cifra is thinking about this. This is a one-day chart um, of the Sirius XM. So anyway, I hope this was helpful. I hope this gives you a little more ammunition to become, again, really your own analyst, but also understanding how the analysts actually work. So with that in mind, I'm gonna stop the recording and we'll open up for Q&A. Thank you.